This is my journal on 10th February 2021. I'm recording this video to document how I made the trades for today and yesterday, and the concepts applied here are based on Michael Anderson, or the owner of the strategy ICT Inner Circle Trader, and I was testing on this strategy by Michael, and I identify some good opportunities to identify the optimal trade entries and trade from his strategy. One of the lessons I learned from Michael Anderson is getting a directional bias. Getting a directional bias means that I use the EMA moving average, the 18th and 40 moving average, which is based on the daily chart, and as long as the market, the candles are above this EMA have not crossed, as long as they are above or below, it's a bullish trend for this case. And if it's below, if they have closed like this point, it may be a signal of a bearish market, and that's how I obtain the directional bias. And for this scenario, it has been a bullish uptrend, but still I could get an opportunity to sell based on the principle that you try to short my bearish in a bullish trend, but at least I get the direction bias. Now going to the 4 chart, another lesson which I learned, it's about resistance points, and this swing, the highest of the swing and the candle which forms the swing, the highest of the swing and the lowest of the swing, those are the regions where the market most probably bounces. As you can see, this region, and this region, and also if you can draw this region, and also there is another region here, the swing that forms the highest and the lowest. Now another example is somewhere here. If I can draw, oops, that's my stop loss. If I can draw which level is this, yeah, that I want to copy this. So these are the regions where I'm talking about, the lowest of the swing, and this is the highest of the swing. So those are rejection points which you can use to predict how our resistance regions will be. Now once I know that, I know these regions are the regions of resistance or support. If I can go to the a bit if I go down to 15 minutes chart, if you can see, yesterday actually this level was a very major support resistance level, and price couldn't be able to break this resistance level, and that's one of the direction bias why the market dropped. And also if I can draw Fibonacci, as you can see, this was a sweet spot. It reached the OTE, optimum trade entry, the 79th region, and then it was rejected. And also it tried to retest the sweet spot, the 68 level, and then I sell. And I think with that an approach, it's possible to identify the fact that this disturbance doesn't cause me to sell or buy. As long as I get the direction bias, it will be a good region to enter. But also I was in a dilemma whether I remain on the direction bias on the daily chart, or else I sell. But this was an opportunity to sell because also there was a formation of trend line here on the 15-minute chart, so you can see. So it was breaking this trend line, so it was an opportunity to sell. With the other strategy of me with the channels, I was selling at this point, and but for this strategy I would also consider if it will be a buying opportunity. If I go back to this chart, so you can see these are resistance regions. Those are 4-hour chart, and also I will show you the optimal trading entry. So at 4-hour chart, you can see those resistance points are very crucial for the formation of this resistance. These swing regions are very good in resistance, like this one. This one was a good resistance point. I could have sell here. And also, if I look at also this region here, the market rejected also at this region, which was also a resistance point. If you can go the next day, you can see the same thing. Now, that's one of the concepts, the resistance and support regions. If I go back to the 15-minute chart, I also used these resistance points as those swing levels as a major turning points for price. Now, looking at this region, actually we're starting on a bearish move, and if you can start from Monday, you find that here is Monday, and the price has been moving upwards. Actually, it has moved around 180 pips, and it was maybe if you can look at another way or another visualization of the market, you'll find that this was the region of the highest of the week, and if we would have traded in that mentality, it would mean that look at these time levels for where the market for the New York session, and you find that this was also a good point for entry to sell, and we have gotten like 70 pips, but still there are many opportunities. For instance, there is another strategy where we check on the daily. If you can look at the daily chart, the price forms another structure: open, rally on the bearish, then open, goes down, then goes up, open, forms the lowest of the week, of the day, then trends, then form the highest. This structure can be a very good strategy: open, low, high, then close. Those are the concepts I learned from ICT, and looking at those concepts, you will I came to find that I could also trade the same strategy at this region where where I would look at New York, the New York midnight. Here is the New York midnight at this point, and it's a good way of analyzing the market and finding out where the market was probable to form the lowest of the day, then trends. And looking at this region, 7 a.m., 6 a.m. in my region, East African time, it's 7 a.m. East African time, but my NT4 has a time difference of being back by 1 hour. So if you look at this region, it's gone bearish, and then it formed the lowest of the week, and then once it comes up and then you enter at this region, it is a good way of trading, and you wait for the New York time, and you could have made like 30 pips. So also we can use this trend Fibonacci to get the optimal trade entries for this trade, and the same thing happens when it after midnight of New York time. You wait for sweet spot, then you enter, boom, it's a rally, then you seeking to form the highest of the day because it's a bullish trend. That's another strategy that is possible to trade. Now, looking at the next day. The next day, I use Fibonacci to get the optimal trade for a sell, and one of the things I identified that all these moves happen during the London session, and this is 10 a.m. here in Kenya, and this is an overlapping candle. So we have confluence of strategies, the optimal trading here, and if it's missed, there is the overlapping candle. I noticed that if overlapping candles form at these regions, it's a sign of market reversal and trending. And so and that's why I took a sell here at this region. I took a sell at this region, and now the market is around sorry, I didn't take at that region. I take at this region after a confirmation. So if one could enter at London session, it will be also a good idea, but sometimes I feel it like risky. So at this region, I was thinking that I was being influenced by the direction bias on the daily chart. You can see it's a bullish direction bias. That's why I was hesitant to take a sell, but I waited for the New York session order block. Here is the order block. I identified something, I learned something about order block, and I found this region to be an order block. So when market comes to retest this order block and form this candle, I took a sell. Actually, the time was appropriate for a sell. It was the New York session. So that's one of the motivations of why I took a sell. But I wasn't even sure until I saw this candle, this bearish candle, and that's where I entered my trade, and it has been trading up till now. So that's one of the strategy of ICT, or Michael Anderson, inner circle trader. So the next day, the same thing happens. At 7 a.m. my time. Since we are entering a bearish trend, I came to a resolution that market will try to form the highest of that day based on New York midnight, and it actually came to this region. And also the good thing, also a confluence of confirmation, is that it came to retest this order block. So it was an opportunity also to sell, and that's why I made my decision to sell at this region. To form the highest of the day, then comes here back, and then I sell. I was actually targeting 20 pips, but still I'm holding on my trade, and I might take profit 25 pips. And let's see what is happening, because today is Friday, and I think it would have been better if I take my profit at 20 pips. But the other trade, I will leave it. The other trade which I took yesterday, I will leave it to trend until it reaches this region. But one of the doubts I have is that we are entering another liquidity pool or order block. This region, this is also another block, and it seems that the market can get a very good rejection here. I don't know, but I'll just be observing. I will wait to see how the market behaves. And that's one of the lessons I have learned from the ICT inner circle trader, and I'm still testing on this strategy. And one of the things I learned about about this strategy is, in forex you don't have to be rash. Actually, it could be a good idea if one plays passively. Let's assume I start with an equity of $1,000 and a volume of 0.1, and per week I target 30 pips. Per month will be times 4. This will mean that I'll be getting $120 percentage profit. Okay, making 12%. If I can optimize this strategy for the next 2 years, maybe I start in 2022, 2023, 2024, 2025. Now, if I am targeting a monthly income of $3,000 or 300 Kenya shillings. Based on these strategies, we find that I could compound my strategy, my equity, 1,000 times 0.1. That pips per week. So per month it's profit So if I'm able to make 12% per month, targeting 30 pips, risking around not more than 3% of my equity, targeting 30 pips per month, 120 pips, get a profit of how many dollars? This one, 12%. And I compound it each and every month. Where can I reach to get a monthly salary of $3,000? It will take me around approximately how many years? 2022, 1, 2, 3, 3.5 years. 3.5 years to be getting this salary. Now, if I optimize on my strategy and I'm able to make around 40 pips per month, I will reduce the journey 40 pips per week, and I will reduce the journey to around by which month? By September, around 2 years, 1.8 months. 1.8 months I'll be getting this income, $3,000, getting a monthly profit of 6%. So making 16% per month from equity, it's something achievable and something that is within the range of what can be achieved. Making 40 pips per month, per week, and 160 pips per month. sometimes I will be getting losses, but average, if I can make these pips, which is equivalent to 10 pips per day, but with on average per week I get 40 pips. I'm not targeting about 10 pips per day, but 40 pips per month, per week. Now, if still I can improve my strategy on the second year so that I get 50 pips per month, which is equivalent to what? If I can get 50 pips per month, I will reduce my journey to 1 year and 3 months. 1 year and 3 months to get an income of $3,000 per month. That's getting 50 pips per week, and increasing my volume each and every month, compounding. Now that's the anticipation, but let's assume I make only 25 pips per week. 25 pips per week, or equivalent of 5 pips per day. And if I can get to, if I can achieve only 25 pips, that's 100 pips per month. Only 25 pips, even though sometimes losing trade, but if I am able to make a consistent of 25 pips per week, it means that by 2025, or actually by 2025, I'll be able to achieve that monthly income of $3,000 by 2025. So the number of years that will take this is 1, 2, 3 years. Now, if I'm trying to look about the realistic goals of this strategy, and I'm able to only make 25 pips, risking only 3% of my equity, then I'll be able in like 3 years achieve a monthly income of $3,300, making 10% per month. 10%, only 10%. If I can optimize with an equity of 500, I'll be getting 20% of this, and still I will increase. Okay, let's say I make I put an equity of $2,000, and then I'm able to risk to make 25 pips, and this have a volume of, okay, let's assume 1,000, and make times 2, increase the volume times 2. If I can risk only 6% my equity, and then make 25 pips per week, so definitely within only 1 year, I will be able to achieve only 1 year, 1 year, 3 months, I will achieve $3,000. That's it. So I'm increasing the volume, reducing the number of pips, then compounding for 1 year, 3 months. We'll get this amount, 3,000 per month. Anyway, if let's remain at 30 pips per week, it will take me only 1 year to achieve that leverage, to achieve that monthly income. Let's assume I continue with my career of programming, and if I can enter into the industry of programming, it will take me around 2 years or 3 to achieve the same monthly income. If 3 years or 4, I don't know, but there is a room in Forex, there is a room of obtaining freedom, financial freedom, but still, let's say I take 3 years or 2 years, maximum of 2 years. Will I be able to achieve this monthly income from programming? Let's assume 2 years. Definitely, it will be a very tricky venture, and it will be impossible. But if I can give myself 25 pips and still go for those 3 years, 1, 2, 3, I will have potentially increased my equity and monthly salary of this much. Let's assume I take the least risk. Take the least risk. If I can take the least risk on this, I'll be able to get risk in all 3% per trade. I'll be getting this income by 3 years time of $3,000. So worth it? Does it worth it the venture? Does it worth it taking this pursuit? So some of the question is, will I get this strategy set up? Getting 25 pips per week is very easy, very easy to make such amount of pips per week. 25 pips per week, very little number of pips to make. And if I can maintain 100 pips per month and be able to get that salary by 2025, January. So let me focus on making 25 pips per month, and if on the higher edge I'm able to make 30 pips, the better. But this is the least case. I can label this as the least case. If I can copy this structure again and work out on the best case scenario. The best case means an average of 50 pips, let's say 40 pips per week. That's the average case. That's the best case. Best case scenario. Risking 6% trade. It will only take me 9 months to reach that target of $3,000. But if can still maintain 25 pips, I just only increase the volume, and you find that by 1 year, 4 months, I will have obtained that goal. And I'll be making 20% of my equity. So if I still compound for the next 2 years, I'll be earning 1 million per month for the next 2 years, starting from 2022, risking at this the size of 0.2 for $1,000, and that's what I'll be obtaining after 1 year, after 2 years. So the same for the worst case, after 2 years, it will be how much? $1,895 after 2 years, but after 3 years it will be $3,000. That's for the worst case. But still, the power here is the power of compounding. That's the best thing about what I'm opting to find out.